Hi, everyone. I'm Rob Maddox. I'm the director here at St. Mary's in the Office of Student Financial Assistance. And uh, briefly, just kind of what we're going to be talking about through this session is going to be everything from the financial aid process to really where the aid comes from, how it all gets put together, and some of the ins and outs and rules that we have to follow here in financial aid. So let me go ahead and share my screen with you and we'll get started. There we go. And typically, I like to start with, very simply asking a question. And to most folks, this question does make them think a little bit because they think they know the answer right off the bat. But what is financial aid? And the reality is financial aid is anything that is awarded to a student or a family to help cover those educational expenses for post-secondary education. And we'll talk a little bit about what those expenses entail and what they are. But this is anything. So this is anything from loans to grants to scholarships, which we will talk about all of those as well. But the biggest source for student financial aid right now is the federal government. The U.S. federal government awards everything from Stafford loan programs to Pell grants to Teach grants to all these different programs that they have that they award to students. And then you get into states. And so the state of Maryland and the Maryland Higher Education Commission have some great programs that we'll talk about, different colleges and universities and what they have to offer. And then the private sources where students can go out and find and apply for sources there. And then you can see there kind of around the circle, the employers. There are some employers that do have education benefits that may be anything from covering a part of tuition or tuition matching for payments, or it could be tuition remission or waivers. It's really up to the family and the students to go check with their HR departments to see if they do have something and how they would go about applying for that and how they would use it. And then we start at the very beginning. So where we are right now, how do we apply for this financial assistance? How do we get the ball rolling on receiving these funds to pay for education? And the reality is you're going to start, you can start right now if you are a senior in high school. If you're a junior, go ahead and wait till next year. But right now, this FSA ID is really, really important because this is your digital legal signature for the Department of Education. You're going to need this to do anything that has to do with financial aid for the Department of Ed. Both the student and a parent in the household will need one. And it's something that you're going to use year after year. So it's really important to keep track of it and know exactly where it is. FSAID.ed.gov is the direct link. If you go to student aid or just Google FSA ID, it will be the first thing that pops up there for you. So using this FSA ID, you're going to log into the student aid website. And the first step here after you have that FSA ID is the federal free application for federal student aid, the FAFSA. This must be filed to receive any sort of federal aid. It is also something that is required by many institutions as well as some of the state programs as well. It is a standard form. It's pretty basic federal information, demographic, financial information for both the student and the family. And if you are a senior right now, the FAFSA opens October 1st. If you're a junior, you'll wait until next year to file the FAFSA for the year prior that you're going to be enrolling. So it gives you almost a full 12 months before the start of the academic year that you have to file this form. But it's really important to start as soon as you can. There are currently 5 different ways that you can file the FAFSA. The most common there at the top is the FAFSA on the web through the FAFSA website. And then a few years ago, they rolled out the My Student Aid mobile app, which allows students and families to file their FAFSA on their mobile device or tablet. You can still do it old school and print out a piece of paper, fill it all in by hand, sign it and mail it into the Department of Ed. But these are happening less and less. And then there is the ability, if you're unable to actually fill it out digitally or even on paper, that you can call the Department of Ed and Central Processing to dictate all of the information over the phone to them, and they will file the FAFSA on your behalf. The last one there that you see is an option. You won't see it happening very much. The financial aid administrator access to Central Processing online. In most cases, the administrator will walk you through the steps on the FAFSA on the web. So you won't see that one happen a whole lot. And then really you'll get into this My Student Aid app, which, as I mentioned, you can file the FAFSA through the My Student Aid app, but there's a lot more coming to this functionality of this application as well. And one of the really important things that I think that you should keep in mind with this app is if you do have it, more and more information will be eligible to you and available to you as time goes on. And so everything from now, as I said, filing the FAFSA, but then getting into conducting your entrance counseling or signing master promissory notes for the loan programs, or even checking your loan balances through the National Student Loan Data System at any point in time after you've taken those loans. So much, much more information coming to one single place for students. The idea behind all of this is really making things easier, simpler, and faster for families and students to be able to not only do things like file paperwork, but also find information about their account balances and loans and those kinds of things. And so about 5 or 6 years ago, the FAFSA went into what they called prior year. And this means that those students that will be enrolling, those of you who are seniors right now and will be enrolling in the fall 2021, you may file the FAFSA starting October 1st of this year. But it will be using the 2019 tax information. So that means that even though you'll be starting school in 2021 using 2019 tax information on the FAFSA. And so in order to make this, again, simpler and easier for the families, they implemented this IRS data retrieval tool. And Congress had to pass a law to allow the IRS data system to speak to the Department of Ed and transfer that data directly from the IRS and what is on the taxes into the FAFSA form. And so when you get to the section on your tax information, as long as you've marked, yes, I've filed, I've completed my taxes, and no to the other questions you can see there for amended returns or anything like that, simply link to the IRS and it will move all of that important information over. And as you're filing the FAFSA, one of the big questions that always comes up is who's included on this FAFSA? And I think it should be pretty obvious the student is going to be on there. They're the ones who will be benefiting from the information that's on the FAFSA form. It's going to be their demographic information. If they had earned income for the year or if they filed taxes in 2019 for this upcoming FAFSA year, that information will all go in there as well. And from the parent side, it really is all parents in the household. And so if a question usually comes up is, divorced parents. The parent that offers, that the student lives with that offers 51% of the support of that child is the parent that will be on the FAFSA. If that parent has been remarried, then the step parent will also be on the FAFSA as well. So like I said, is that household perspective on all of the demographic and financial information for the entire household. So how do we use all this information, or how is all this information used? You've gone through the FAFSA, you've filed, you've answered all 120 plus questions. What does it do? And so the one thing that the FAFSA does for us, it does give us a lot of information, but it gives us one very specific piece of information that is the expected family contribution. And this is calculated by that formula in the EFC. And so this is something that once you have all this information, it's yours. It's going to stay the same regardless of whatever college you apply to or you end up enrolling, because it's what the Department of Ed thinks that you can reasonably be expected to pay for education. This does not mean that you have to pay this dollar amount out of pocket. What the EFC does is it does dictate to us eligibility for programs from everything from federal programs to institutional to even state programs. And so this is a very important number, and that's why it's really important to be thorough and careful when you're filing the FAFSA to be sure it is true and correct. And a few things that are pretty high impact as you go through the FAFSA in terms of how that EFC is calculated. Kind of first and foremost, tax information, adjusted gross income, taxes, earnings, those kinds of things that are in and will be ported over from the Department of the IRS to the Department of Ed. Those are going to be really important. And then your current financial information. So the FAFSA looks at your entire financial picture in kind of a funny way. It takes 2-year-old tax information, but the actual current financial information, so what's in your savings account or your checking account or investment accounts, It's going to be a snapshot of the day that you file the FAFSA. It's going to be as the day of. And so I always kind of joke and tell parents that if you're going to win the lottery, wait until the day after you file the FAFSA, because you won't have to put it in there for that year. But then getting into more demographic, the number in household is very important, and especially the number in college, because the formula understands that the more people you have in the household, the more it takes to support that household financially. And again, the number you have in college, if you're a parent with 1 or 2 or 3 in college, then you have 1 or 2 or 3 tuitions to pay. And so it will split that EFC amongst those different children in the household to pay for those tuitions. And then lastly, one of the other really big pieces, that untaxed income. And so this is something that is listed in there, and it could be things like child support or benefits from clergy or military, housing benefits, really anything for you that you've received that are not taxed in a normal way to be included in that program. And one thing I do touch on is what's called the CSS profile. So it has a lot of the same information the FAFSA form does, but it is a little bit different in that it is run by College Board. It's a College Board financial reporting tool that they developed, and it's not used by many schools, and we'll touch on that, but it's used to determine institutional need for institutional aid. And so it's not, as I mentioned, required, but as an option for a lot of schools. It does take into account a little bit more information. It uses 2 years of financial data, and so the 18 and 19 tax year instead of just 19. But the kicker is it does cost you something to submit it. And so as you can see there, $25 for the first and $16 thereafter. But as I mentioned, there are only about 400 colleges, universities, and scholarship programs in the country that use it. And there's only 3 here in the state of Maryland. And those 3, Hopkins, Loyola, and St. John's, if you're going to be applying to those, the FAFSA is still required. This will be in addition to the FAFSA for those institutional programs. And so once we have the FAFSA and all the data has been crunched, you have all the important information in there, you have it signed, you have it submitted, how do we, the institution or the school, use this data? And so there's a couple of steps that we go through to really kind of put it all together to see what you, the student, and the family are eligible for in terms of those different aid programs. And so we start here first with what is the cost of attendance. And this is made up of 2 very distinct parts. And so these 2 parts are your direct cost, what we know you will be charged, tuition fees, housing, meals, to be a student enrolled in the institution. You take that along with what we call your indirect costs. These are your books, transportation, personal expenses, things that we know it costs to be a student, but we won't charge you for to be enrolled at the institution. And this is your total cost of attendance. And this is really important because this is the first factor in what is our next step in determining demonstrated financial need. So as I mentioned, that cost of attendance is your first step. You have your direct costs, your tuition fees, your indirect costs, your books and transportation, and then you subtract the information that is from the FAFSA or the CSS and gives you that expected family contribution. So your cost of attendance minus your expected family contribution gives you your demonstrated financial need. And this is not, I need money to help pay for college. This is a very specific, as you can see there, calculation of a financial determining what the student may be eligible for. And it's really important, again, to understand, as I mentioned, that EFC is yours. Regardless of the institution you'll be applying to, that's your expected family contribution. So the reality here is the cost of attendance will differ from school to school. Therefore, your financial need will differ from school to school as well. And so as you look through these, a school that has the cost of attendance of $60,000 and your EFC is $30,000, then your financial need will be $30,000. If the school has a cost of attendance of $30,000 and your expected family contribution is $30,000, then you'll actually have 0 financial need at that institution. Again, that EFC doesn't mean that's what you have to pay out of pocket. It's how we determine eligibility for different programs that students can use to help pay for the education. As we talk about financial need, again, that's very, very important because it gets into what we can offer. And so these different categories of aid that we have start very simply with need-based aid. Does a student have financial need? Do they qualify for this based on that very simple equation of demonstrated financial need? And then the other side, the non-need-based aid. And so these two categories of aid can contain a lot of different types of aid that we'll talk about as well, which are your kind of self-help and gift aid. You can see it divided there, but scholarships, grants, loans, work-study programs. Self-help means that a student will actually pay them back as you would with a federal student loan or a student education loan, or you're earning them as you go. And so a work-study program where you're actually going, you're being paid, but it's a part of your financial assistance package. And the gift aid being what everyone wants: scholarships, grants, free money that you don't have to pay back or earn when you're in school. And all of these can fall into that need-based or non-need-based category. So it's, again, kind of figuring out how all of this goes together. We understand the rules. We're paid and we are in the job to be sure that we understand everything that's happening. But for you to understand a little bit too of how it is put together. So hopefully it does make a little more sense when you get that financial assistance package from us or from someone else, that you're able to compare and see how all those different pieces fit together. So as we talked about those sources of aid, as we saw that circle at the very beginning, the federal government, states, institutions, private sources, and those employer benefits. We're going to talk about most of those here now, and kind of where those funds are coming from and what they mean, and the different kinds of funds that can come from those different places. And to kind of start, the institutional funding is a lot of times the first thing that a student sees. That's because they're the two different categories, main categories of funding from institutions. You get into our scholarships, which are there to award a student for their achievement, and in most cases don't take financial need into account. On the other hand, the other side of the coin, that need-based side, are those grants. And so helping a student cover the cost of attendance with demonstrated need. And so these two are awarded for different reasons. They can certainly add up to a lot, but it all depends on the college, university, and how their packaging works. One thing to keep in mind, though, that's really, really important is for students who are applying to universities and applying to colleges within those universities, those scholarship deadlines may differ from the application for admission. So it's really important to have a listing of everywhere you're going to be applying, when scholarships are due, when applications are due, to be sure you have everything in on time, because once you miss those deadlines, there is no going back. And then we get into the Maryland state funding. The Maryland Higher Education Commission have done a lot of great things to assist students in the state of Maryland. They do have to stay in the state. So as a Maryland resident, they must be used here in the state of Maryland. All the public and most of the private institutions participate in the state funding. So most of the schools that the students here will be applying to will be able to use those. Again, really, really important thing to see here, March 1st, 2021, you must have the FAFSA in for many of these awards. If you are late, the Maryland Higher Education Commission does not accept late FAFSAs. They're both merit and need-based programs, but you can go and check all the different programs that Maryland has. The MHEC website is full of great information, but one that we always recommend students look into are the legislative scholarships. Every senator and delegate in the state of Maryland has funds to award to a student to help cover the cost of higher education. They'll have to go to that site there, mdelect.net, and you'll be able to find, based off your home address, who your senators and delegates are, how to get in contact with their offices, and figure out what their application processes are. And then outside scholarships, this outside funding and private sources. These are a little bit tougher because they require all the work to be done on behalf of the student. And so there's not very much that financial aid administrators or financial aid counselors like myself or high school counselors can do because it's really up to those students to go out to places like these search engines. Some schools or school districts have great sources of their own that they can offer up to students to be able to find these scholarships. But the reality is they really are everywhere, and it's up to the student to go out and find those programs, apply for those scholarships, and hopefully reap the benefits of their time and determination. And as we get into this section on loans, I want to be sure that families understand that loans are a part of the process, and they're a part of that financial aid package. And it's something that we work, and the federal government works very, very closely to be sure that students understand all the ins and outs of these loans. There is counseling that they're required to do. There's information that we send out to students. at the beginning of each semester and the end of the academic year that gives them information on their loan balances, how to get in contact with their servicers to be sure that financial literacy is happening on behalf of the student, to be sure that they're in a good place upon graduation. And the two main loan types that we have are something that we always talk about because they're very, very different. The first being the federal Stafford loan types. And these are, as you can see, they're the student loans, the two opportunities for students to have in terms of the subsidized and unsubsidized student loans. These are guaranteed to the student as soon as they file the FAFSA. As soon as they have it in there, they're eligible for these student loans. There's no separate application or anything else that needs to be done on their behalf. The PLUS loan or parent loan that's there you see through the Stafford loan programs, that does require an application, but it is there for families to assist in covering the gap between everything the student has been offered to that point and the cost of attendance, or what is the billed charges for that semester or that year. And the other side are those private source loans. And these are, we always tell families that these should be the second look. These should not be the first option. These are banks, credit unions, and private loan servicers that you would have to go out and apply for independently of any of the FAFSA process or anything. And plus, as you'll see in a moment, they'll never be able to match what are the interest rates and the kind of fine print on those loans that the federal government can. So we talked about those two options the students have, the subsidized and the unsubsidized student loans. First of all, as you can see there in green, the subsidized student loan is only awarded to a student that has demonstrated financial need. And so we go back to where we were a few minutes ago, and that financial need calculation, you have to have financial need to be in order to receive these subsidized loan programs. It's subsidized because the federal government pays your interest on these loans while you're enrolled at least half time in school. So that's really important to understand. If you can take these, it's your best option. They come, both options, the subsidized and unsubsidized, come with that 6-month deferment. But as you can see there in that unsubsidized section in red, the interest will accrue and be capitalized on the principal. That means that interest does accrue while you're in school. And again, we recommend that families and students, if you can, a couple bucks a month is really all it takes to keep that initial principal to what it is upon graduation. And this is something that we hope will come to an end. The federal loan programs back in 2011 were included in the sequestration bill. That was a 10-year bill that was passed by Congress that put this origination fee on all of those student loans. They actually just changed today, October 1st. But what that means is every student who takes out a federal student loan has to pay this right off the top. And it's the difference of, it went from 1.059% to 1.057% as of October 1st, 2020. But what that means is that $5,500 principal the student takes to cover their education, they immediately return that $58.25. And so they're only reaping the benefits of about 98.9% of the money they take, but are required to pay back and are accrued interest on that full $5,500. And then, as I mentioned, you're not going to find a better rate in a private source loan than you will here with the federal loans. They are locked in for the life of the loan. And so that 2.75%, we have seen that rate go down over the last few years. We anticipate that it will go down again or stay the same. We get these early on in the calendar year for the next academic year moving forward. But these loan programs are built so that students do not get into insurmountable debt upon graduation or finishing school. And as you can see there in the blue box, that dependent student category, which most of the students that we see at St. Mary's fall into, the most you can have that first year is $5,500. And so that means that second year, third year, fourth year, you do get a little bit more, as you can see, the $6,500 to $7,500 moving forward. But they have a lifetime limit on what a student can take. At St. Mary's College right now, our lifetime loan indebtedness upon graduation is right around $25,000. The state of Maryland as a whole is right around $32,000. So that means that students coming out of St. Mary's College have a balance that they pay on monthly for 10 years of about $200 to $250 a month. Again, not something that is astronomical that students are not able to recover from and really be sure they pay on those student loans. So what else? We've talked about the process. We've talked about where the aid comes from, some of the ins and outs of probably the most confusing part in the loan programs. And so we want to cover a few things that we know can't be covered with, the initial forms and the formatting. And one of those is the special circumstances. And so this is built out to cover conditions that we know can't be shown on the FAFSA. Now, these are things that we can't take into consideration, especially right now with the way the world has been kind of turned upside down with COVID-19. We expect to see a lot of these moving forward, and it's really important that you get in contact with financial aid administrators, you get in contact with us in the financial aid office to be sure that we can help you in any way that we possibly can. And so as we receive this information from you, this explanation and documentation, we'll review it as best we can to be sure that we have everything that we need and we have that proper justification for any changes that we can make to the FAFSA form. And so it's always important to keep in mind that as we go through this process, we're not trying to pry into your personal lives as much as we have to be sure that we have the documentation to back up and to justify the changes that we're making. As with any other federal form, we have auditors that come into our office to be sure that what we are doing is fair and what we are doing is correct and following the rules. And so with that documentation, we can prove as to why we made those changes. And these special circumstances can cover many, many things, but these are a handful of the few that we anticipate and we do see on a fairly regular basis. And so as you can see, their loss of employment or income is probably one of the biggest ones right now that we will see moving forward. And so really let us know if you have any questions. This is something that you'll have to reach out to each independent institution on. It's not something that can be done kind of in batch. And so if you give us a call, we'll give you the information that you need for us to go through this process and be sure, as I said, help you the best way that we possibly can. And as you go through, it's become really standard practice for most institutions to award students and have these financial aid packages along with their admission information. And so if a student applies early decision to St. Mary's and we have a FAFSA on file, which as I mentioned, can be done before the application is due or even before decisions come out, we'll have a full financial package to that student. And these will include and should include everything that we know you're eligible for from federal programs, state institutional programs, all the loan programs we know you're eligible for. So really putting together this full package so that we know that you have all the information that you need when you're sitting down making that decision, that you're making the best decision based off of all the pieces that you have there at your disposal. And as you're moving forward, even if you're not ready to quite file the FAFSA yet, here's a lot of things that you can use. And the first stop should always be the Federal Student Aid site. They have a lot of great information to carry you through the process from, if you're a junior now, timelines, checklists. If you're a senior now, again, those timelines and checklists for things that you should be doing now, things to be thinking about, things to be making note of, to be sure that you're going to be on track to have everything done on time. And then the FAFSA forecaster. If you are a junior, it's a great place to go in and be able to get some insight into what the EFC may look like moving forward, but also for you to be able to use that college cost worksheet that they have there, which will break everything down, again, very granular to what is the tuition, what are the fees, what are the housing costs, what are the meal costs, what aid do you anticipate having, what resources do you have to pay for that aid, to give you a complete breakdown of what that cost will look like for each individual institution you may be applying to or that you're planning on attending. And then a net price calculator. The net price calculator is something that is on every institution's website that is a part of the Title IV program. And Title IV is just federal funding for institutions of higher education. This means that every school that I know in the state of Maryland, 99% of the institutions out there that you will be applying to have a net price calculator. The net price calculator here at St. Mary's is very well done. We take pride in the fact that if you put true and correct information in there, it's going to look really, really close to what your financial package will look like for the coming year. And so really taking all those pieces into account, again, tools that you can use moving forward through the process. And then one kind of last thing that I want to touch on that we St. Mary's find really, really important for you to understand is this idea of cost and net cost and how that relates to value. And so, very simply, as you can see there, again, another very simple equation of, what we're going to charge you, those costs, what's going to be on the student bill, and subtracting any gift aid that you receive. So those grants and scholarships, that money that you don't have to pay back. This is your net cost. This is what you actually have to pay for the education. And that can be through loans or savings or payment plans or whatever the case may be. And this net cost, as I mentioned, is really important to understand, because an institution that offers a $25,000 scholarship, which is wonderful, as compared to St. Mary's $6,000 scholarship, which is also pretty awesome, that net cost is going to look very, very different. The reality is our $6,000 scholarship covers 50% of our tuition. And that $25,000 scholarship into the school may cover 50% of the tuition as well. But there you are with that net cost of $6,000 here at St. Mary's and $25,000 somewhere else. So it's really important to put all those pieces together and realize that, you know, a $6,000 scholarship can be a huge part of that net cost calculation. And then the value is a little different, because value is subjective on a case-by-case basis, because that is what you gain, or what the student gains as related to the cost of the education, through the educational experience, through what's offered through the institution, to really how they feel if it becomes home for them, where they can thrive academically. And so it's really important to understand that value, and how, you know, St. Mary's, we feel as though it's a very high value in education. And sometimes it may cost just a little bit more, it may cost a little bit less as well, but that value is still there. And so if there are any questions, here's our contact information, our website there. We have a great live chat. So Monday to Friday, typically 8 to 5, you're able to chat with the counselor live there on the website. Right now, email is the other really great way to get a hold of us. Within a day or so, you'll have a response from the staff in the Student Financial Assistance Office. So again, thank you. I appreciate your time, and we'll answer some questions.